My name's Cameron. I'm here with Fred. Today we're going to go over going into policy reviews when you're in the script and how you break down what that client has for a policy, and then how you go into the sales process of possibly replacing that policy, assuming it is better for the client, and then obviously creating the value. So moving forward, they'll work with you. So typically when we get into that, going to the policy reviews, right? Mm-hmm. We've got the script, right? Where that part of the script where it says, hey, Fred, I guess what would be the plan for you and your family if you were to die tomorrow? What does that look like for you?
Oh, well, I already have life insurance, Cameron.
Perfect. Actually, that's great. Actually, one of the things we do here, Fred, is we actually make sure that you've got the best coverage in force, so that if you were to die tomorrow, that you know that mortgage is completely covered. So, Fred, let me ask you a question there. And then, so see right there, right? Mm-hmm. I'm acknowledging that. I'm saying that's great. You never want to say, oh, that's a bad thing, right? Because if you're saying it's a bad thing and then you're going to convince them to do the thing which is buy life insurance, but you're saying that they bought life insurance is a bad thing, right? You're essentially saying the client's stupid.
Right. It becomes combative at that point.
It becomes exactly very combative, which from a sales perspective, you want it to be as much of a conversation as possible, which it is a conversation, but you don't want there to be sales pressure, is what they call it. So right there, I'm acknowledging that. Again, we're using our method, acknowledge, I'm responding, and then I'm moving forward.
Yeah.
I'm going, okay, so Fred, awesome. I guess that's great that you have insurance. I guess what type of, what company do you have?
I think I was with X insurance company for $200,000.
Perfect. So immediately, what you want to do here is you're asking the question that's like the least personal, right? Mm-hmm. Like, oh, what insurance company is that, right? It's kind of like, for example, if you say, hey, what car do you drive, right? You're not necessarily going, oh, what trim level do you drive, and right? You're asking, what car do you drive, right? That's just very it's a very easy question. It's not like you're not prying too much detail right away. So they answer that question, right? Mm-hmm. Now, as a professional, right, as a business owner, as an agent, right, your job should be you really want to do some market research, right? You want to understand the other companies out there that are competing against you, right? Again, we do broker, but we're not going to have access to a lot of different companies out there, right? So you say XYZ insurance company, and go, that's awesome, Fred. I guess, Fred, how long ago did you get that?
It was about a couple years ago.
A couple years ago?
Yeah, when my oldest got out of high school, we got it. Perfect.
Okay. And I guess, you said $200,000 through XYZ company, and you got it 2 years ago. I guess, do you know how much you're paying for something like that?
I think it's about $85 a month.
$85 a month. And I guess, Fred, do you know what type of coverage that is?
I don't really know. I'd have to pull out the policy documents from the filing cabinet.
Okay, so right there, you just notice the way I ask all those different questions, right?
Yeah.
It's a genuine curiosity. Mm-hmm. Not so much where you're like, Fred, can you maybe possibly tell? Like some people go way too into that tonality thing. You're asking the question and then kind of having that little intonation at the end, like, hey, I guess, how much did you say you pay a month? Yeah. And so it gets them to slow down their thought process and gets them to answer the question openly and honestly, right? Yeah. So we've gone through, we said, what's the name of the company? How much coverage is it? How much, how long ago did you get it? What is it that you pay, right? All that type of stuff. And then it's like, well, what type of coverage do you think it is, right? Now, oftentimes they're going to say it's one thing, right? Oh, it's whole life, mm-hmm. right? Or they're going to say, I don't know. Either way, it's like, well, Fred, I guess, it sounds to me like, you've got a $300,000 mortgage, right? I guess, you don't even have necessarily enough coverage, right? Sounds like you're a little bit underinsured. I guess, Fred, legally I can't overinsure you. Ethically, I just don't want to underinsure you here. So first off, there's definitely a holder. I guess if we could, consolidate everything and probably do it for the same cost or a little bit less expensive to make sure you're taken care of, I guess, would you be opposed to opening that policy to go over it?
I guess not, no.
Okay, awesome. Well, is that policy right now, is it easily accessible, or do you have it on your phone? Most people have those policy owner services where you can just go right on and log in. Do you have it on your phone right now?
No, I haven't looked at it in a while.
Okay. Well, here's what we'll do here. If you can just try to find it. Is it accessible for you? Just go get it right now for me. You don't mind?
Sure. Yeah, I'll try to pull it up.
Awesome. So you don't mind just getting that, and then we'll go over it, and then we'll actually get you on and off the phone here pretty quickly, and just make sure we've gone over that, and make sure you have the best coverage, and again, fill that hole there where you're missing coverage. So again, you're still in control of that conversation, mm-hmm. right? Right, you've given them options like, again, would you be opposed to making sure, right? Again, you want them to feel that no matter what they do here, it's a win-win situation.
Yeah,
okay?
Absolutely.
If they pull out the policy, right, and it's really, really good, hey, we're still going to get you enough coverage that you still need. And if it's not really, really good, we're going to consolidate it, right? One word I like to use is the word fiduciary. Again, if you are an licensed insurance agent, right, you can't just indiscriminately just throw policies or replace policies just because you want to replace policies, right?
Yeah, right.
For example, if you've got $1 million whole life that you got when you're, 20 years old and you're 48 now, and I could get the same thing for you, but it's going to cost $400 more a month. You can't do that, right?
Wouldn't really make sense.
Oh, I mean, you can get yourself, in trouble not
Exactly.
only from a compliance perspective, from a legal perspective as well.
Yeah.
So now you've asked these different questions. Let's say you've pulled out the policy now, right? So, Fred, you said you pulled out the policy. You said it's from XYZ company. That's still what we talked about. Okay,
Yeah.
awesome. So I guess can you just double check there? What type of coverage does it say it is?
Looks like it's a term policy.
Okay. How many years is left on that?
Well, I got it 2 years ago. It was a 30-year term.
So you got about 28 years left. It looks to me like you're overpaying a little bit for that. We can actually get you about $1 million for about $110 a month, and it would get you the couple $100,000 you need, plus more to cover the income, and you still have that $200,000 to be actually per thousand a lot cheaper. I guess knowing we can get you that, I guess would you be opposed to making that change so you're taken care of and have more coverage?
I'm okay with saving money.
Yeah. So obviously that would be a very simple one, right? Where it's like
Sure.
very straight to the point. Oftentimes, though, sometimes people have policies where they've got 6 or 7 final expense policies, and it might be, let's say the price is, it might save them $20-30 a month, but it's through one company. One thing I always utilize in that situation, right? Let's say they've got a bunch of different insurance. I say, well, Fred, I guess when the day you die, right? Do you think your family is going to easily be able to access all those policies? Because it sounds to me like you're a little bit confused of how much, where you've got your coverage too.
Right. Yeah, that's a great point.
And it sounds to me that you don't even know how much coverage you have, right?
Until I pulled it up, I didn't realize there was such little coverage.
And you're the one who pays for it, right?
That's right.
Okay, so if you're the one who pays for it, and you're the one who purchased the policies, you really think your family's going to know how much coverage you have?
Probably not.
Okay, so if we consolidate it all and just make it so it's one claims process, that would probably be easier, right?
Yeah, absolutely.
Okay, perfect. So here's what we'll do. Let's get you here through a company called Combined, and we'll get you about $50,000, which is actually $10,000 more than you have now, and it's going to be one bill.
Okay.
About $20. You'll save about $20 a month, right? But again, it's only going to be one claims process. Again, make sure that you give me all the information for your kids so that when the claim comes through, we just get that taken care of.
Okay. So you're saying cancel the other policy that I have?
Exactly.
Okay.
Exactly. Yeah. Well, and we'll fill out a replacement form and everything.
Gotcha.
So, right there, see how you're utilizing. They've already got a bunch of different policies, right? Let's consolidate it. And what what I use here, right? The Costco. I always call it the Costco method.
The wholesale pricing?
I go, wait. Well, if you were to go buy Pop-Tarts at the grocery store versus Costco, which one's going to be cheaper?
Costco.
Well, Costco's cheaper because you're buying more Pop-Tarts at once, right? Insurance works the same way. If you buy at wholesale prices, you're going to get more insurance for a cheaper price.
Yeah.
So that's how I use that. That's my consolidation line to consolidate it into one type of policy. Another thing you can utilize as well is again, you've got to know a lot about universal life. You study those. A lot of agents just do not do a good job structuring those universal life policies well. So, for example, let's say someone's 33 years old and they're like, I got a $500,000 universal life policy, and they're paying $82 a month. Do you think that's structured correctly?
Probably not.
Probably not, exactly. So you say, hey, I'm a little bit concerned here, Fred. It looks to me like you've got a policy that you've probably seen the research, or you've probably seen the articles on that where companies are getting sued for this, where they're not structuring the policy. And eventually, you've got an overpriced term policy. So the policy is going to lapse. You're not going to get cash value. Can you just grab that policy and I'll actually show you in the policy? You can do the math and you'll see what I'm talking about, right? You're kind of build that urgency for them. And the one thing I always say too, just to kind of put them at ease, is I say, but the good news is we're actually here now because at least you're not like my 82-year-old client who actually just lapsed. You're 35 years old, 36 years old, 37 years old, where you're young enough now we can fix this and take care of this. So moving forward, you're good.
Sure.
Okay.